Hello everyone, good morning. Welcome to this Saturday presentation, an educational presentation. Now today, I'd like to talk to you about the only statistic that I ever really look at. I'm sure if you've come to my presentations in the past, you've known that I'm fairly against looking at statistics. I've taught methods and systems that relied on statistics, and I've used them myself, and believe it or not, I really don't apply them in my own trading because everything I've used, with the exception of the one thing I'm going to be talking about today, is basically blown up. In other words, the statistics didn't matter. When the market changed environments, the statistics went out the window. So that's why I really don't rely on statistics at all. I really don't look at them that much, except for this one. Now, I know a lot of you would say, well, why are you looking at this numerical data as opposed to all of the others with what's going on with the economy, or perhaps what's going on with this particular method that you trade? Well, here's the reason. This particular statistic has been correct over 80% of the time, and it's been correct as long as I've been trading. So as long as I've been trading for 43 years, and from my mentors who were actually trading a good 40 to 50 years before that, they said that this statistic held true for that time period as well. So I'm going to share with you what this is, how you can apply this to your own trading, and hopefully it will really give you an insight in how to improve your own trading and take it to the next level. So remember, everything I'm going to be teaching you today is going to be easily applied on the PTS Primo charting platform. This is the educational platform that actually teaches you how to trade. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. If you're new to my presentations, we are all about educating our students. In fact, that's our only goal, simply to educate you. We don't promise to have the best system. We don't promise to have the best trading plan or the best time frame to trade in, or we know what the best market is. And we don't promise to tell you what the market's going to be doing like so many chat rooms or trading rooms do. In fact, that goes entirely against our philosophy. Our philosophy is simply to teach you the things that I've accumulated and learned in my 43 years of trading that hold high levels of consistency. And we teach you how to apply them so that you can apply them to your own trading and be able to be in charge of your own trading destiny. So I've been trading now for 43 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. Excuse me, a specialist is someone who basically specialized in making markets. I made markets in roughly about 60 stocks. So if you wanted to buy or sell a particular equity like IBM or USA or Waste Management, you had to go up to the trader who specialized in making a market. So I did that during the crash of '87 and the bull market that followed. So once again, I've traded every type of environment you can think of, straight down, straight up markets, sideways markets. And believe it or not, any system or any trading plan you can think of, I've pretty much traded it already. It's probably been renamed or rebranded, but it's been around before. They just kind of are reselling it. So I know in my 43 years of trading experience what works in terms of consistency and what doesn't. So there's no real need to spend your hard-earned money and all your time searching for that holy grail when it's really right in front of you. It's sound fundamental education. Education that can take your trading to the next level. And you'll see what we're trying to do today. We're trying to educate you with this statistic to hopefully take your trading to the next level. Now, before we begin, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results based on this statistic, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now remember, we are first and foremost an educational company. Another way to get some great free education is to follow us on Twitter. There's our handle right there. If you haven't joined us already, there's a lot of great information I post on a daily basis. Anywhere from signals our strategies have generated to little bits of financial wisdom. So lots of great free educational information. Please feel free to follow us on Twitter. Now, once again, as I stated in the opening statements of today's presentation, we are first and foremost an educational company. This is an educational presentation today. So that's our entire goal, simply to educate you, because once a trader is educated, well, then you can rely on your own trading decisions. So for the first time, you'll take charge of your own trading destiny. Remember, a good mentor, a good teacher does not trade for you. He does not tell you what to buy or sell on a nightly basis by furnishing you with signals. He does not require you to go to a chat room or a trading room to find out what he likes. He does not tell you what he thinks of the market, what the market's going to do next week, go higher, go lower. That's not a good mentor. A good mentor simply teaches you how to trade. So that's my goal, to teach you how to trade with a specialist edge. That was the same edge that was taught to me some 43 years ago, and what has sustained my trading for that long. And hopefully this edge that I teach all my students around the world in over 116 countries and in every state in the United States, hopefully it will be able to do the same for you. Now, remember, this is a class today, so I want you to ask as many questions as possible, but please wait till the end of today's class to ask questions, okay? Because we have a good crowd here. I don't want to stop for every question. The only question I will answer is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical issues, many times just log off and log back on to go to webinar. But if you're still having technical issues, don't worry. Each and every one of you will be sent a link to today's recording. Excuse me. All right, with that said, let's begin. Now we're going to be talking about the only statistic that I ever look at. Okay, and it's true. I really do not look at statistics. I know a lot of traders always say, well, Steve, don't you look at the win-loss ratios? Don't you look at the worst drawdown statistics? Don't you look at all these other things, risk-reward ratios? And I say, no, I really don't. It's just one statistic that has really been correct 80% of the time, though, as long as I've been trading and as long as my mentors have been trading. So I'll share with you what that is right now. The facts state that 80% of all traders lose money. All right, that's the stat. I'm not trying to be facetious or condescending, but that is probably the most important stat you'll ever see. Why? Because it's the truth about what you've gotten yourself into. Because if we have roughly, I think we just about have this, or maybe just a little more, 100 people in today's presentation in the webinar, this statistics is saying that 80 of you will lose money. And when we say lose money, it doesn't mean, well, I'll go into a series of losses. It means you will lose all that you've set aside for your nest egg for trading. Okay? Those are the statistics. Now, the facts also state that 15% of all traders will break even. Now, that's really not that bad. If you're learning how to trade, if you've been trading for a while, you're basically just treading water. But after all your trading and hard-earned money you spent and all your hard-earned time you're putting into this, you're really not seeing any results. You're basically, just like I said, treading water. Finally, this means that only 5% of all traders, so if we had 100 people here today, only 5 of you will be consistently profitable, okay? These are extremely important statistics because they're really sharing with you the facts, the things that you really need to know. So if you look at this on a pie chart, this large portion in red symbolizes the percentage of traders that will ultimately fail. The portion in blue represents the traders that will break even, and that small little green sliver represents the amount of traders or percentage of traders that will be consistently profitable. So you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, my mentors taught me that there were always enough profits to go around. You know, most traders come in to trading with this, mindset that for every winner there's a loser. Now, for every loser there's a winner. It's a zero-sum game, and that is actually true. But I've always said, and my mentors taught me this same mindset. They said that would be similar to thinking about breathing. That for every breath you take in, there's someone losing a breath that they take out. I mean, that would be silly. Because why? Because there's enough oxygen to go around for everyone. It's the same way with trading. There are enough profits to go around for everyone. But we have this mindset that it's limited, even on a daily basis. There's only so many profits going to be available today. Whatever trader can scoop them up first wins. And that's just silly. There is, an infinite amount of possibilities for making profits on a daily, weekly, monthly, and even yearly basis. So the answer is actually simple. How is it possible that this small percentage is able to consistently capture profits? Well, these traders, whether they know it or not, know the importance of being in sync with the market. That's really the basis. That's the cornerstone of everything. Because think of it. When you lose money, it's because you're out of sync with whatever you're trading. Whether it's a 5-minute chart, a monthly chart, whether it's a currency pair, a stock, an option, it makes no difference. It means that you're doing the opposite of whatever your trading wants to do. For example, let's look at this chart, this older chart in UI. This is the way most people think they get in sync with the market, myself included. Once again, I'm not trying to be facetious or condescending. This is the way I used to trade as well. You see a chart like this and you say, okay, well, in the beginning, we're making higher highs and higher lows. So that's a definition of an uptrend. So we were in an uptrend. That's when you want to buy or be long, right? But then that $10,000 course you took on the institutions that gave you some convoluted indicator to track them says that you've hit some resistance right here. All of a sudden, it stopped going up. And on top of that, you also took a candlestick course, all right? There's a bearish engulfing pattern. There's also another bearish engulfing pattern. And lastly, we're looking at pattern recognition here again, and we're making lower highs and lower lows. So there's a bunch of negative things that all of a sudden started happening. So what is your analysis? After all that, all the tens of thousands of dollars you put into courses and buying all these convoluted indicators and reading all the books and going to all the seminars, your analysis is this market wants to go lower. So if it wants to go lower, you want to be in sync with the market, right? And how do you be in sync with the market? You're going to be selling. So you decide to sell right here. After all, that's a bearish engulfing pattern. That's the second one. And you're going to make a lot of money when this goes down. So you sell, and then this happens, right? What happened? You were out of sync with the market. This type of analysis is antiquated. It really doesn't show high levels of consistency. Take it from someone who tried using the same analysis over 4 decades ago. It didn't work for me then, not about to start working now. Sure, every once in a while it will work, but there's really not a lot of consistency to it. But you ask yourself, how come all of a sudden it went straight up like this? Everything that I studied, all the indicators, that $10,000 class, it all said that this was going lower. All right? Remember, being consistently out of sync with the market is the root of all your losses. It's not because you necessarily have a bad trading system or a bad method. It's not because you're trading the wrong market or the wrong time frame. It's not because the earnings were good or the earnings were bad. It's not because of the who's in the office of presidency, and it's not because of the jobless claims. Those things have nothing to do with the market. The market wants to do what it wants to do, regardless. How many times have you seen that there's terrible news and the market goes straight up, right? Or there's great news and the market goes straight down. That's why we can't rely on those things. We have to rely on what the market is telling us. So that's why you're losing, because you're basically out of sync with the market. That's the root of all your losses. Now, what if I told you there was a tool that was designed to automatically put you in sync with the market? Wouldn't you love to have that? Wouldn't you love to say, well, at least I'm in sync. Now I can apply any method, any strategy. Maybe I can use my own discretion. It doesn't matter, but the odds will be in my favor because now for the first time, I feel confident that I'm in sync with the market. What if there were a tool that could do that? Well, in all actuality, there is. And in fact, you actually have possession of it right now. It's called the buy-sell line. I'm sure a lot of you are saying, wait a minute, Steve, I don't have this. What, do I have to pay $10,000 for this? Or is this another sales job you're trying to give me? No, you have it most likely regardless of what platform or whatever you're using to trade. Because the buy-sell line, if you haven't come to my presentation before, I've talked about it a number of times, it's just the 50-period simple moving average. That's all it is. But most people use it incorrectly. They don't know how to use it. They say, well, I guess when it crosses with the 10 or the 20, or if I add an exponential, or maybe if I see, that it's in conjunction with another indicator. No, here's the correct way to apply this. In order to use it properly, all you have to do is ask yourself this question before each trade. And that is this: where is price in relation to the buy-sell line? Now, the first thing most of my students say is, well, Steve, what do you mean like the price of the higher time frame? So like where is price like on the daily bars if I'm trading a 5-minute? Or if I'm trading a weekly, where is the monthly price? Listen, don't overcomplicate the trading. Whatever time frame you decide to trade, plot a 50-period moving average. That's all I care about. Don't worry about another time frame. There's no need to use a higher time frame. We don't teach that. If you want to, you can, but there's absolutely no requirement for that. We always say our philosophy is trade the time frame you're generating signals on, and that's it. You don't need to trade and look at a higher time frame. So if you're looking at a 5-minute time frame, plot the 50-period simple moving average and ask yourself, where is price in relation to that? If you're looking at a weekly bar of the currency pairs, plot a 50-period moving average and then ask yourself, where is price in relation to that 50-period moving average, that buy-sell line? If you're plotting a daily bar of stocks, ask yourself, where is price in relation to the buy-sell line? Now, some of our students even write that down and put it on a little post-it and put it on their computer screen just to make sure you ask yourself. You have to ask yourself before each trade. You cannot ask yourself once you're in the trade, because that's why we call it the buy-sell line. The reason is, once you ask yourself that question, you'll only come up with two possible scenarios, because obviously if price is above, well, then you should only have a buyer's bias. Now remember, a buyer's bias is just a point of view. It's a mindset. It doesn't mean you buy at the market. It just means that, well, if I'm going to be doing anything, it has to be coming from a buyer's point of view. In other words, you can only look for buy signals that need to be generated. You'll never go short if price is above the 50. Now, conversely, if price is below, you will only have a seller's bias. Once again, just because you have one bar closing below does not mean you're going to sell at the market. In fact, you won't even sell at all. This is not a system. It's not a trading strategy. It's just the buy-sell line telling you how to be in sync with whatever the market wants to do in the overall trend. Okay, so if price is above, you only look for buy signals. If price is below, you only look for sell signals. That's how simple this tool is. But let me show you how powerful it is. Let's look at the process and how simple it is to apply this on our platform. This is the PTS Primo charting platform. All right, remember we looked at that older chart in UI. Remember we said, well, we've done all the analysis and it says to sell. This is going much lower. And then this happened, right? Okay, what did we do wrong? Do you see a 50-period simple moving average plotted here? No. So if you look on our upper green strategy tab on our platform, on the far left-hand side, right here where it says buy sell line, we made it easy by having it our very first technique in the far left-hand corner. Just click that on. Once you click on that tab, the drop-down menu will appear. And click on 50-period simple moving average, okay? We have 4 different ways to view the buy-sell line. This is the simplest and easiest way to view it. And once you do that, you'll see the 50-period moving average. Now ask yourself, where is price in relation to the buy-sell line? Well, remember, when price was going up, according to your analysis, it was in an uptrend, and you were correct. But you didn't have to, really overcomplicate things by higher highs, higher lows, and institutions. All you had to know is that price is above. And now when you started getting these bearish engulfing patterns and lower highs, lower lows, that's where you messed up, because there's no consistency in that. Remember, you never want to sell above the buy-sell line. So you never would have sold, and you never would have taken a loss. Now, depending on what strategy you have, maybe your strategy would have generated a buy signal somewhere around here. We're not going to be talking about signals today. We're just talking about being in sync with the market. Because remember, being out of sync with the market is the root of all your losses. Remember, I don't want you to join that 80 percentile. I want you to get out of that 80 percentile, that statistic where most traders fail. Let's look at this example in PINS, all right? Here's the way I used to analyze this, probably like many of you as well. Well, a lot of you will say, well, we've been going lower, but check this out. This is major Fibonacci support, okay? I took that Fibonacci course, and this is where we should be stopping, okay? This is also an Elliott wave support, so I think I want to be a buyer. And on top of that, I also took that $5,000 candlestick class, and this is a buy signal here. There's some nice buy. There's a bullish engulfing pattern here. There's some really nice little dojis here telling me that we may have stopped. So I'm going to buy right here, okay? And this happens. Okay, look familiar. What did we do wrong? There's no 50-period moving average applied. So that's the first thing you do before you ever even trade. You have to have a 50-period moving average applied on your chart. It doesn't matter if this was a 5-minute chart, a tick chart, or a weekly or monthly chart. It makes no difference what market either. So we click on buy sell line. In the drop-down menu, click on 50-period simple moving average. And then we ask ourselves, where is price in relation to the buy sell line? It's always been below. So even up here, we knew not to be a buyer. Even down here, we knew that there was no such thing as support there. There was no Fibonacci support. That's silly, because the market was telling us, which is the only thing you want to listen to. The market was saying it wants to go lower because it's below the buy-sell line. That's why we call it the buy-sell line, because it tells you whether you should be looking at the market from a buyer's point of view or a seller's point of view. So there's no reason in the world you should have considered buying. Now, rule of thumb. Just because you have one close above or below doesn't mean, well, Steve says now I have to look at this from a buyer's point of view. No, look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. In other words, just because you have 1 or 2 bars closing above does not mean you should have a buyer's bias. You need at least 3 to 5. For example, let's look at this older chart in BIG. We have the 50-period moving average here, and we just basically crossed over. Now, a lot of students will say, well, Steve, that's really not enough here. It doesn't look like we're going to go lower, but how many closes do we have? 1, 2, 3, 4, 5. That is enough if we're following this basic rule. And look what happened. 15 points to the downside. Now, as the stock firmed up and started to rally, now it started to touch and hover above and below the buy-sell line. It closed above, closed below, 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 below. Now, but look here. 1, 2, 3, 4, 5 closes. Someone would say, but Steve, nothing's really happening, and we have a gap here. Most likely we're going to come down and fill that gap. Or maybe, Steve, this is just a pullback, and we're going to come back and make new lows. The earnings are supposed to come out next week, and they're really bad estimates, so I don't want to buy this. Remember how I'm listening to outside things. What is the market? What is the chart in front of me telling me? It's telling me that the overall trend is up, even though it hasn't done anything. Until it has 3 to 5 closes below, the overall trend is up. Remember, one last time, this is not a green light to just buy at the market. You have to also have structure in the form of a strategy, in the form of some technique or some type of method. This is just telling you which mindset you should have, a buyer's or a seller's mindset. So at this point, we knew we had a buyer's mindset, and look what happened after that. You see how simple this is? We're not relying on support and resistance. We're not relying on what the institutions are doing. We're not relying on who's in the office. None of that really matters. The market wants to do what it wants to do. Our job is simply to listen to it and then jump on board whatever direction it wants to go. We don't care what the reasons are. It makes no difference to us. All right, let's look at this example, old example in Merck, MRK. All right, someone said, well, Steve, it's kind of just holding here. I think we're kind of making a base. Look, it's oscillating above and below, but if you look at it closely, this is 9 consecutive closes below. Even though it looks like we're kind of holding here, the market is not only telling you it wants to go lower, it's screaming it wants to go lower. And then look what happened. Fell out of bed, 8 points in 1 week. So you see, traders love to play this victim game. They love to say, gosh, I got killed in this market. How did I know it was going to go straight down? How did I know it was going to go straight up? Boy, you know, I could never figure these things out. Once you have this basic tool and you really apply it to all of your trading, you're not going to have to play that victim game anymore. Traders love to do that because they love to not take responsibility. But once you learn what we teach you in our courses, you have to take responsibility. And that's the thing about trading. You never want to rely on anyone else. You want to make your own decisions. Now, I know a lot of you are saying this is just too simple. I mean, you know, I go to all these other webinars and they teach me all these convoluted theories and logic and different indicators. I mean, I already have the 50-period moving average. I never knew I was supposed to use it this way. It's just too simple. It can't really work that well. Well, if you're still not convinced yet, let's look at this chart here of the Dow, okay? Now, this is the Dow. The market was going straight up, and then we ran into some pressure, right? We started to go lower. And now it looks like we're kind of maybe building a base, but we just can't seem to go up that much more. Now, this may look familiar to what we've been doing lately, but if we look at the bottom of the chart, this is October 1987. I was on the floor. I was trading during October 1987. Remember anything that happened during that time? Well, let's see what the 50-period moving average told us. Coming into that period, we were well above, so it was okay just to buy. But look at this time right here, starting in September, right around right now, actually in September, the same time, some years ago. We had closes below, then closes above, then closes below, more closes below, just a few closes above, and then more closes below. So the market is trying to tell us there's certain indecision going on here, but more with a bias to the downside because we have more closes on the downside and we can't really get out of our own way. So if anything, even if you're not an aggressive trader, you should have been taking caution right now because the market was telling you this is indecision until we get real clear-cut 3 to 5 closes above that sustain above the buy-sell line. We should either get out of the market, maybe move our stops up, or maybe not buy any more stock, or maybe take a portion of our profits, because we all know what happened after that. These signals right here were well before the crash of 87. Now, the crash of 87 would have been comparable to a one-day market drop of 5,000 points today. Now, I know a lot of you are saying, well, look at this. This is a crash, 5,000 points. That's not bad. No, this was the 2 weeks leading up to the crash. This is the crash right here. This is Black Monday. This is comparable to 5,000 points today, okay? This one day, this one bar. Let's look at another chart if you still don't think this has much importance. Here's a weekly chart of the spiders. Once again, we're going up pretty well, but now we're starting to oscillate, have closes below, a few closes above, back more below. Look at the date, January 2008. Remember that date? We have pretty strong warnings right here on a weekly time frame in the spiders, the ETF that represents the S&P 500. And look what happened. That was the beginning of the 2008 financial crisis, a bear market that lasted close to 3 years. This is a weekly chart giving you a signal. Let's bring it up to date a little bit earlier. Just a couple of years ago in October, this is a chart of the spiders again, a daily chart. We started to oscillate, had a close below, now 3 closes below. The Dow fell 4,600 points in the next 3 months, okay? So this can really help you. I'm not just saying that it works to the downside, but it can protect you if we happen to go into a strong downward market. Now, go back and research your last 10 to 20 trades. I can almost guarantee your losses were due to the fact that you were out of sync with the buy-sell line. In fact, we've all been taught, right? Something goes way too low, it's way too oversold, you've got to buy it, right? Or something goes up way too high, it's too overbought, you've got to sell it. Well, think of that. Every time you're doing that, most likely you're out of sync with the buy-sell line. Now, the best way to do that would be if something is tremendously overbought while you're below the buy-sell line. That would be a high probability area to sell. Or if something is tremendously oversold, but it's above the buy-sell line. Right? These are all different ways to look at it. Now, what we're going to do here is something a little bit different. I want you to look at our disclaimer one more time because I'm going to show you some performance results of up-to-date charts on our platform, just going back to this past week, and to show you how we could have applied, and it would have helped in a lot of different stocks and different ways you could have been trading, okay? So remember, I'm going to show you a lot of examples right now, but please remember, all these examples are strictly for educational purposes only. So let me just go over to a live look here. I have a number of charts plotted up. Let's look at BAND first. Once again, remember I told you how traders love to play the victim game. They look at this and go, gosh, if I had only known to buy down here, but who knew? I mean, the market looked terrible, right? And it looked like we were going to go much, much lower. Well, that's true. It did look terrible. But if we applied the buy-sell line, how could that have helped us? Now, let me show you a more advanced way to apply the buy-sell line that's only on our platform. I'm sure you all have access to a 50-period moving average. But what happens so many times with students that we've taught this simple rule is that they'll start using it, and all of a sudden they go to a webinar and some guy promises the world with some indicator or some brand new system that no one's ever heard of, and they get, you know, so enamored with this new, so they forget all about the buy-sell line. So we developed Pro Trader Strategies and myself a way so that at least it's on there in front of you, and it'll make it a little less harder for you to forget about and a little easier for you to remember. So we're going to apply the buy-sell line. Instead of using the 50-period, let's apply the fluid. And what this does is it still has the 50-period moving average right here, but anything above is in the blue zone. That's the buy zone. Anything below is in the red zone or the sell zone. So as you see, BAND was below. It was oscillating above, below, not enough to tell us we were in an uptrend. But right here, what do we have? 1, 2, 3, 4, 5 closes. Price was roughly at 72 then. Look where it is now. It's 100% higher, over 100% higher in just about 5-6 months. So do you see that once you have knowledge, once you have education and information, you don't have to rely on anyone or anybody else telling you what to do. You know right off the bat whether you should have a buyer's mindset or a seller's mindset. That's half the battle. You've just eliminated the root of the majority of your losses. Remember, my goal is to teach you these things to take you out of that 80 percentile. I don't want you to be there where you have all your hard-earned money and giving it all away. Now, as we see what's currently happening, we're oscillating right here above and below, but we don't have enough below yet, and we've kind of bounced above. You see, we had one close below, one above. another close below, back above. Remember, we need 3 to 5 closes below. Let's look at the next example, TIF. Well, someone would say, well, Steve, there's absolutely no trend here. Look at this. We're up, we're down. But once we apply the buy-sell line, we see a better picture of what's really going on. Because right here, we had consecutive closes above, and we're in an uptrend. You know, here's a strategy number 4, buy signal. I can just tell off looking, and you could have had a nice buy from 125 up to 3 or 4 or 5 points, okay, in a week. But all of a sudden, we crossed below here. We had 1 close below, 2, 3. We closed above, and now we have 1 close below, 1 above. Now 1, 2, 3, 4 below. So that's enough to tell us this is pretty negative. If we were long, if we got caught long, we should get out, or at least we should tighten our stop, or maybe take a little bit of our position off the table. It's up to you, your decision. We're not, advising you of anything. We're just trying to give you suggestions. And look what happened. This was the beginning of September. As we go forward, this was the clue. And look at, how did we know this was going to drop like that? We had no idea. But we are clearly in the sell zone now. And do you think now, looking back in hindsight, that it was giving you a clue right here? This is the power of the buy-sell line. Let's look at the next one, SYNH. Same thing here. Someone looking would say, Steve, how can you get any type of overall trend from this chart? Well, once you apply the buy-sell line, you see that the majority of the time, we've been in an overall uptrend. It wasn't until 1, 2, 3, 4, 5 closes right here in the beginning of September that it gave you a clue you shouldn't be in this anymore, or that the overall trend is down. Now, someone could say, but Steve, we have 1 close above, another close above. Remember, you need 3 to 5 closes. As we go forward, look what happened the last 2 days. Do you see how powerful this tool is? As we look at ILMN, the same thing. We were kind of going up, and then it looks like we're going sideways, but maybe we're trying to build a base here. Look at this. If we take out our line here, look at the lows here. We have a low here, another one here, and then another here. This is a very strong base. This must be where the institutions are buying, right? So if it gets down there again, I want to be a buyer, because most likely it'll stop somewhere around here, this level, and then come all the way back up and fill that gap. That's the way we're taught, right? Well, let's apply the buy-sell line and see if it confirms that. Nope. This entire time, since the beginning of August, we have been below. So you don't want to touch this. Now, if I go forward, look what happened this last week. Do you see how that could have helped you stay out of trouble? Or if you were more aggressive, it could have provided you with some nice shorting opportunities as well. Let's look at Lulu, okay? We've been above the 50-period moving average, and this past week or two, it's given us more than enough time to get out, because until we close back up above, we do not want to be long this. Why? Because remember, the object of what we're doing is to be in sync with the market. That's how we are going to become a consistent trader. If you're buying below the buy-sell line, I mean, how is this going to be working for you? If you would have bought right here on this gap down here, thinking we're oversold, thinking there's support, thinking the institutions are buying here, how is this working out? You're going to have a higher level of consistency if you're in sync with the overall trend. Any gold traders? A lot of people have been wondering what's going on with gold. Well, for all intents and purposes, gold is still in the overall uptrend scenario. So, it's up to you. Remember, this is not a suggestion to buy or sell. We're just telling you what the market is saying. And the market's just basically telling you that gold, or the ETF for gold, GLD, is saying until we get 3 to 5 closes below, the overall trend in gold is up. Let's look at CTSX, all right? Right here on this downward day was the beginning. We had 1, 2, 3, 4, 5. So up until now, you have to be looking at this from a selling point of view. Now, at this point, someone said, but Steve, we closed above. I thought you said to buy once we go above. Well, first of all, this is not a strategy. So remember, you're not going to be simply buying or selling because we close above or below. You're just going to be knowing what type of bias to have, what type of signals to look for. And you need 3 to 5 closes. 1 close above is not enough. Look what happened. You had 1 close above, right back down. You need 3 to 5 closes to determine the overall trend. If we look at Amazon, well, look what's happened here. 1 close below, 1 back above. 1 right on the line, but look at this. 1, 2, 3, 4, 5, 6 closes below. What is that telling you? It's telling you that the overall trend is Amazon is going lower until it has 3 to 5 closes above. So you have to determine what you want to do with that. Now, this is on a daily bar. I know a lot of you would say, well, Steve, but the weekly bar is above. Remember, as I said in the beginning of the presentation, we only look at the time frame we are trading and the signals are generated on. So if you trade daily bars, there's absolutely no reason to look at a weekly bar, in my opinion. Now, you can if you want to. That's your prerogative, but we don't teach that. And someone would say, well, why? I've always been told that that's what you're supposed to do. Well, to be honest, in my 43 years of trading, that's one of the least things I've ever found any consistency in. In fact, it's almost like an urban myth. I've never really seen it work for me. So why would I teach that if I really have never had any success? Only trade the time frame that the signals are generated on. That's all you have to concern yourself with. Keep trading simple. Don't overcomplicate it by looking at other time frames. As we go on to SHOP, we see here that what do we have? We have a total of, well, a lot of closes below. So this is telling us we're not going to be a buyer of this until we go back above. So SHOP is in an overall downtrend, and any higher days or up closes should be viewed upon as selling opportunities and not buying opportunities. SWBI, same thing. Now here we had one close below, and look how it bounced up. So that obviously is not enough. But right here, look at the numerous closes below. This is not enough to tell us that, well, we should be buying this, because remember, you never want to buy in an overall downtrend. You only want to be a seller. You will have a higher level of consistency if you stay in sync with the market you're trading. Here's Apple. This is very interesting. Apple has just two closes below. Is it enough to go short and look for selling opportunities? No. We need at least 3 to 5. So this is getting very interesting right here. This may be something you want to be looking at, because if Apple has 2 or 3 more closes below, what the stock is telling you is that the overall trend has changed to the downside. Same thing with Facebook. Facebook just had 2 closes below. Now here we had 1, 2, 3, 4, 5. So this is why we say this is not a system. Because if you said, well, Steve said 5 closes below, so I just sell at the market, right? No, it's just telling you that now you must start to look at things in terms of that overall trend. So once we closed up above and had 5 closes above, now you just switch gears. But it does not give you free license to buy or sell at the market. This is not a system. It's not a strategy. It's just a mindset tool. As we look at Tesla, here's a perfect example of how sometimes we come right down, almost like magic, touch it, and then bounce off. So Tesla is pretty well established that it's in an overall uptrend. How about the spiders? Okay, here's an interesting look again. We have 1 close below. On Friday, it had its first close below the buy-sell line. Is that enough for us to say, well, the market's in a downtrend, an overall downtrend? No. We may close up on Monday and have a huge rally. So this is not enough. It's something for you to be looking at and to monitor, but not something to be concerned of yet. AQB, one person looking at this would say, wow, there's no trend here. You can't make any rhyme or reason out of this. But if you apply the 50 period, you see, well, we were in an uptrend until right here. Now we're in a downtrend, but look what happened. At the beginning of September, we had 1 close above, 2, 3, 4 closes. That's enough to say, well, we should start to look at this from a buyer's perspective again, all right? And look what happened. You see how this works? Trading is really simple, as I always say. It's just the trader who makes it more complicated than it has to be. There's no reason to rely on earnings. There's no reason to rely on the jobless numbers. There's no reason to go to a chat room or a trade room. You have all this information in front of you. You can make your own decisions. That's how you become a consistent trader, not by relying on what other people are telling you how to trade. And finally, RDY, okay? We apply the buy-sell line, the fluid feature, and as we can see, it's been in an uptrend the whole time. Sure, here we had 1 close below, 1 above, 1, 2, 3 closes below, but then right back up above. So this is why we say you can't just buy or sell based off that. All right, so here we are, right at this point. If we go fast forward, look what happened. That was in the beginning of September, and even though it looked like we were kind of rolling over and getting ready to go down, you see how you will have a higher level of consistency if you only trade in sync with the buy-sell line, okay? Okay, let's go back to the presentation. Now, remember, let's recap before we go into the question and answer portion. always have the buy-sell line applied on your chart. I don't care if you're trading 5-minute charts of the E-mini futures. I don't care if you're trading 4-hour charts of the Australian dollar. Or I don't care if you're trading weekly charts of Apple. It makes no difference. You must have a buy-sell line, the 50-period simple moving average, always plotted on your chart, whatever it is. And then you simply ask yourself that question. Where is price in relation to that buy-sell line? If price is above, then you'll only have a buyer's mindset. That means you have to look for buy setups. You don't buy at the market, you don't sell at the market, you simply look for setups. You just have to add some structure. If price is below, you only look for sell setups. You will never do the opposite. Why? Because we don't want you to stay in that 80 percentile. We want to get you out of that 80 percentile. And this is the fastest and easiest way I know of how. I've often said if I was stranded on a desert island and I could only use one of the trading tools that I've accumulated and learned in my 4 decades of trading, it would be this, because it has helped me so much and kept me out of so much trouble as well. Remember, being consistently out of sync with the market is the root of all your losses. Try and strive to be in sync with the market. The easiest way to do that is to apply the buy-sell line. Okay, we have a great discount for all of you taking time out of your Saturday morning to join me today and come to this educational class. We're going to offer you our bootcamp course. This is where we go into higher levels of trend trading. It's all based on trading with the trend, but we're also going to talk about entries, exits, and stops for trading with the trend. We'll also talk about trading aggressively as well as conservatively with the trend. You're going to get course rules to a lot of techniques and add-ons available. These are the up and down arrows that signal when those techniques have been triggered. Now, on top of that, we're going to give you another strategy. I've talked about this in some other Saturday webinars. This is a great pullback method. It's strategy number 1. It's our most consistent pullback method. We'll give you all the entries, all the exits, and all the stops. So you'll know the complete rules to all the different ways to trade strategy number 1, both aggressively and conservatively. It does this through a unique Don Chin channel setting, and we'll have it all set up for you. Now, it says here on the graphic, a stock strategy, because when we first started promoting it, we just figured we would have more traders trading stocks. But as we've expanded and we've grown our base to traders around the world and all over the United States and different countries, we see that we have a lot of currency pair traders. We also have Bitcoin traders. We have E-mini traders. So strategy 1 can be applied to any market, any time frame, in any direction. So don't be fooled by where it says stock strategy right there. In fact, let me share with you the process. Most traders would look at this and say, this is an older chart of the spiders. They'd say, well, we're in a downtrend, right? We're going down. So Steve says that we don't want to buy in a downtrend. But remember, we always apply the buy-sell line. And in this particular example, the price was above the buy-sell line. And on top of that, all the requirements were met for a strategy number 1 pullback buy signal. So where everyone else was thinking we were in a full-fledged downtrend, you could have purchased towards the lows and seen a nice, potentially 8-point gain in just about a week. Now, it doesn't seem like a lot, but that 8-point gain represented over 600 points in the Dow. So you could have used this as a market timing tool as well. So that's going to be included as well, strategy number 1. But we're also throwing in extra bonuses for you. For example, you're going to get our trading bootcamp course online for $1,500 value. You're going to get strategy number 1 trend trading course. That's a $700 value. This is the entries course as well, a specific course just on entries, a specific course just on exits, and bonus number 5, a specific course on stop placement. You'll also get the scanner for the buy-sell line. You also get our bonus number 7, top-bottom strength percent of strength scanner. This is another way to determine the short-term trend. Bonus number 8, that's a strategy number 1 scanner on the PTS Primo charts to find strategy setups for that strategy we're giving you. Bonus number 9, the PTS Primo charts multi-scanner to scan for multiple strategies at once. Bonus number 10, auto-click smart chart entries exit tool. This is with one-click access on our platform. You can find out exactly where to enter, where to exit. It's really a great feature we have on our platform only. Bonus number 11, if you have another platform as well, such as NinjaTrader, Sierra Charts, MT4, Metastock, or TradeStation, we'll give you the add-ons, the up and down arrows for those. And lastly, the most important, bonus number 12, you're going to get 6 free months of the PTS Primo charting platform. It's a great way to learn how to trade. Look at all these bonuses and what they're valued at. This is all going to be thrown in basically free for you. All these things on the PTS Primo charting platform, okay, at your access. Everything that's taken me roughly about 40 years to accumulate, you have right in front of you, and it's one click away. This all comes with personalized tech support as well. Remember, 6 months of the platform, absolutely free. This would normally cost you close to $900, totally free. There's no cost involved at all. So, what is our Saturday morning discount? Well, normally, if you purchased all of these things separately, there's just so much information here, things that have taken me so many years to accumulate and put together. This would cost you, I would say, close to $8,400, $8,500. We're not going to charge you that by no means at all. We're going to discount that down to, for a limited time only, today only as a matter of fact, $297. Less than $300, you're going to get all this information as well as 6 months free of the platform. Now, one thing we didn't include in this and talk about, but it is included, is right at the very bottom bullet point, educational correspondence. You'll also get my personal email. Anytime you have a question, you can send me an email regarding anything, and I'll be there to answer for you as your personal mentor. So this is all included for less than $300. Once again, I can almost guarantee that most of you have lost more than $300 this past couple of weeks, probably trading, right? Well, for $300, you're getting over 4 decades of information, and you're getting someone who uses this on a daily basis to educate you along the way. Remember, we always state, and this is what our students tell us as well, a year from today, you will have wished you became a member of these courses. We have so many students that finally decide to come on board, and they tell us, why didn't I do this a year ago? I've wasted so much money. And we don't want to have you spend $5,000, $10,000. We want you to learn and showing in our sincerity that for less than $300, you can have a ton of information at your fingertips. So take advantage of this. Take your trading to the next level. Here's how to take advantage of this great offer. Contact Pro Trader Strategies. I developed the platform with them. They're in charge of all the discounts and the pricing and the tech support. You can call them directly at area code 310-598-6677. And that link you see at the very bottom will take you to the sign-up page, the information page. Now, it's not a live link, but we've just posted a live link in the chat box of the GoToWebinar column. So if you're interested, you can just click that on, and it will automatically take you to that sign-up page. If you have more questions just concerning pricing, or maybe you already have the platform, and maybe you already have strategy number 1, trust me, Pro Trader Strategies is very flexible. They would be more than happy to work with you to substitute for something else. Just give them a call. There's absolutely no obligation. They're manning the phones right now, and they'd be very happy to work with you, putting together a deal, okay? Now, as I promised, I would reserve the last portion of today's class to answer any questions. If you do, just open up the question and answer box and go to the little box there and type in whatever your question is. I promise I'll answer. First question we have here is, Steve, what does it mean, educational correspondence? Okay, well, usually, if you've taken any classes or courses, not with us, but with other so-called educators, they'll throw you what's called an online course. You'll probably get a DVD or something, and then you've got to study it. And usually you'll look at it and say, boy, I don't understand this at all. And so you'll have a tech support question, and it's usually some guy at tech support who doesn't understand what your question is, and he'll have to get back to you. Well, we don't believe in that. As an educational company, our goal is to educate you. So rather than having you go through that and just throw you to the wolves with an online course, you get my personal email. So you can contact me whenever you'd like. We have students in Europe who contact me over the weekend in the middle of the night. I'll answer their questions as soon as I can. Or students in the United States that say, hey, Steve, listen, I'm trading strategy number 1 on the currency pairs. Is this a proper setup? I just want to check my work with you. And I'll tell them if they're right or not. So this is what we mean by having your own personal mentor right there. You can email me, and that's the educational correspondence you get. We're not just going to have you call up some tech support number and have someone who doesn't really understand what the question is get back to you. Okay, we don't believe in that. You send your questions directly to me. Another person asking, what do you mean when you say add-ons? You say we get the add-ons. Bonus number 4 was we get the add-ons to these things. An add-on is something you add on to your current platform. So in other words, if you have TradeStation, or let's say you have MetaStock, all right, you're going to get strategy number 1. Now, you're going to learn exactly how to identify what a strategy number 1 setup is. You're going to learn to identify where the exit is. You're going to learn to identify where to place your stop. The add-on is the up and down arrow that indicates when a setup has been generated, so you can kind of check your work. See, so many times with other educational classes, they'll teach you it, but then you're not really sure if you're getting the right setup or if you really learned it, and you want to check with, with someone or something just to make sure you're on the right track. What this does is it produces the arrows so you can check and see like, wow, I'm in line with these arrows. I thought there was a buy signal there, and there's an actual arrow there. So we have add-ons for TradeStation, Metastock, MT4, NinjaTrader, a number of the most popular platforms. You get those as well included, all right? Last question, someone says, can I use these things intraday? Yes, all of our methods, all of our trading strategies, all of our techniques can be applied to any market, any time frame, in any direction. I mean, think of it. How many times have you purchased something and this is a great strategy according to the guy talking, but then you find out you can only use it on daily bars or weekly bars of a certain market or sector. And you're saying, wow, well, I don't really trade that sector, or I don't like to have the risk associated with weekly bars. Well, all of our methods can be applied to any market, any time frame, any direction. So we don't really have any type of restrictions, okay? So that's the beauty of all what we teach you. A couple more questions. Can I just use your charting platform without using other platforms such as TradeStation? Sure you can. But remember, just to let you know, we are an educational company. So in other words, you cannot enter orders through our platform. That's why what most people do is they have their one platform for entering orders, and they use us for getting, the signals and for studying and for education. What I do personally, I have my own personal platform for entering my orders when I trade, and then I toggle back and forth. When I'm looking for signals or checking out different signs, I'll toggle back and forth between the PTS Primo charting platform, and then when I want to enter, I just go to the other platform and enter an order. So that's what the majority of our students do. Last question, someone's asking, can I use this on Thinkorswim? Yes, you can. You can use it and apply it with Thinkorswim, but there's just a slight abbreviation and edit you have to do. That means that we give you a NinjaTrader platform, because the way Thinkorswim is set up, they won't allow us to put our information on their screens. So what they've allowed us, they said, listen, you can take our data. So what we do is we'll give you a NinjaTrader platform where you can use our platform and use their data, and then you can have all the information generated on either NinjaTrader or the PTS Primo charting platform. I personally would use the PTS Primo charting platform because there's so much more information included with that. But yes, you can use the Thinkorswim data. Okay. Remember, any tech support questions, if you have more detailed tech support questions, contact Pro Trader Strategies. They're in charge of all that department. They're in no way there to persuade you to buy something. Just they're very flexible. They'd be happy to answer any question. If you already have, let's say, the platform, you already have strategy 1, they would be very flexible to transfer it onto another issue that we have as well. Okay. But give them a call. And plus, this less than $300 value, it's not going to last long. You do not want to call back 2 weeks later and say, you know what, I'm ready to bite the bullet. I want to take Steve's courses and all that information he talked about 2 weeks ago. Well, most likely it'll be back up to $8,400. So I don't want you to miss this. So as soon as you get the video today, feel free to watch this video as often as you like today, but make a decision, I would say, no later than Monday. I'm sure they're flexible. They would last till Monday, and that would probably be about it. Okay? Okay, good questions. I hope you learned a little bit. Remember, go back and do the due diligence. Go back and apply the 50-period moving average. I can almost guarantee that the majority of your losses were because you were out of sync with the buy-sell line, meaning that you were buying below the buy-sell line and you were selling above. Apply this simple tool to your trading, whatever strategy, whatever method, and you'll see your levels for consistency increase dramatically. I know mine did the minute I started doing this. If you really see that we're really trying to educate you, you'll really see our sincerity in trying to make you a better trader. So come on board and let me be your personal mentor. You'll have my email address. You can email me whenever you'd like, okay? As we take one last look at our disclaimer, remember, I hope you learned a little bit today. If you're interested at all, contact Pro Trader Strategies. There's absolutely no obligation. They will be happy to answer any more questions. But most importantly, I look forward to all of you becoming students of mine in the Trend Trading Bootcamp. Thank you so much for taking time out of your Saturday, and I hope to see you in the course and answering any of your questions. Thank you so much. Have a great weekend. I'll see you next time. Bye-bye.